All right. Hey guys, hey, give me a second. Gotta make sure I'm getting everything set up here. Make sure everything is live. Let's see. Yep, looks like we're good. Awesome, awesome. Excuse me, good lord. All right, guys. Hey, I just wanted to say thank you for, excuse me, tuning into this live session. It truly means the world to me that you're here. Welcome to the 5 minute ish Fridays. Um, for all the people that are new, I do these 5 minute ish Fridays, topics on, excuse me, various topics, but more specifically, note investing. Excuse me, let me grab a drink of water here. And so I do this every Friday, unless like there's a holiday or something comes up at noon. They last anywhere between 5 minutes to 30 minutes to an hour, depending on the topic and if anybody has any questions and things like that. So once again, I want to say thank you for tuning in. It truly means the world to me. And with that, I like to start these off with a statistic. And among residential real estate investors, 90% said that they lost money on their investments. I have been there and I have done that. 52% lost at least $100,000 on a single asset. So this is according from a survey published by Investment News citing data from Clever Real Estate. So the moral of this, the moral of the story is really investing without a buy box. In my opinion, you're gambling. Oftentimes, and I was just as guilty as the next person, doing this, where I had a specific criteria that I'm looking for, and something that kind of came outside that criteria, and I'm like, well, let me just take a chance with it. And every time that I went outside my buy box, my criteria, it has always come back to bite me in the ass. So now I am just structured. I have a buy box, and if it doesn't meet this buy box, I don't want it. I am not going to invest in it. And younger, early on in my investment career, I was, you just kind of like chase all the opportunities. And as you get more seasoned with this, you really become more structured. So that's hopefully with this 5 minute-ish Fridays topic, this buy box, it's geared towards real estate note investing, but you can modify this for if you're rehabbing properties or stocks or bonds or whatever you're looking for. But like I said, this is geared towards more towards the note industry. So as always, I like to start this off. I am not a financial planner or a CPA. This video is for educational purposes only. This is not investment, tax, or legal advice. Please consult with a qualified professional for advice because your mileage may vary. Please always take what I give you or what other people give you, whether you're in a mentoring group, a Facebook group, a LinkedIn group, books, whatever. Just always, take this information to your financial planner or your attorney. That's what you're paying them for. They have your best interest at heart, right? So just always vet everything that anybody gives you. So with that, what is a buy box? Really, it's just a simple definition, your specific investment criteria. A simple example is location, property type, price range, loan to value, yield, really like the borrower's profile. It really sets boundaries, guardrails. That's why I like this image over here. It sets guardrails so you know what's in and what's out. So why does this actually matter? It keeps you focused, avoiding the temptation to chase shiny objects, speeds up decision making, makes deal analysis consistent, and it protects you from emotional or risky decisions. I mean, believe me, I've been there, and a lot of other people have been there as well, where especially when you start getting into, more specifically when I was rehabbing properties, the agent, if at the time I was buying a lot of bank-owned properties, they would come back highest and best, and I would always go over my highest. Excuse me. Early on, I was going over my highest and best, my maximum allowable offer, and like I said, that always came back to bite me in the ass. So now, just please have a buy box, have a criteria that you stick to, regardless. That way, If it falls outside that buy box, that window, that criteria, you don't do it. If it's within that buy box, your specific guardrails, then please, by all means, buy it. So benefits of a buy box: clarity, know exactly what fits; efficiency, it saves times sorting deals; and confidence, it's easier to say yes or no on this particular deal. And it's scalability. It helps you work with partners or virtual assistants. So the cost of not having one, it's 100% wasted time analyzing bad deals. Buying outside your comfort zone equals higher risk, inconsistent returns, and harder to explain to partners or investors. So some real world examples. So an investor with no buy box, everything looks good until it doesn't. Believe me, been there, done that early on. Investors with the buy box, you're able to respond quickly, repeatable, and you can make decisions pretty quickly. So here's an example of of a buy box, more specifically for like mortgage note investing. Just staying 65 to 70% investment to value. First, prevents overpaying, and then also uh, first position notes. Maybe you're only just in a handful of states, like Ohio, Michigan, North and South Carolina, in Texas, like those five. And as you get more experience with this, you can branch out into other states. But if you're just focusing on it's one of those things, right, where initially early on your buy box is restricted, but and that's going to hamper your deal flow. But as you gain more experience, you can modify that buy box because you're getting more experience. You're doing the perform in this particular case. You're doing more performing notes. Then eventually maybe you get into non-performing notes, and then maybe eventually you get into buying, Chapter 7 or Chapter 13's notes. So just like I was saying before, just please stick with the buy box, and just if it falls within that, then definitely I obviously do your due diligence with buying these assets. But if it falls within that buy box, chances are it's going to be a pretty good deal for you. So building your buy box, start simple, 3 to 5 criteria. Example for notes, like I was saying previously: performing only, first lien, unpaid principal balance under $100,000, and investment to value less than 70%. And as you get more experience, you can refine this over time. Some key takeaways: a buy box is your guardrail. It helps you move faster, stay safe, and build predictable returns. And please stick to your buy box, and your box will reward you. So really, that is it with what I wanted to go over today. I'm not seeing any questions. But as always, if you do have any questions, please, you can drop them in the chat. I'll see them. I'll respond to them. Or you can shoot me an email, larry@ljhinvestments.com, or give me a call, 513-301-1468. Or you can just schedule a 30-minute call, phone conversation with talkwithlarryhoffman.com. And I just published a book last week. You can find it on Amazon, Mailbox Money Retirement, for deeper strategies. So I go into a little bit more detail on this. And I mean, the book it's only $16.99. I mean, it's relatively cheap. And then the bonuses that you get with with that book, I go into great detail. I actually do a walkthrough on a note, showing you what's a good note, what's not a good note. I mean, just that bonus alone is well worth more than the $17 for that book. So you get instant access to that, when you get that book. So once again, if you have any questions here, let me turn this back on. If you have any questions, let me move this over here. If you have any questions, please feel free to, schedule a time, talk with LarryHoffman.com, and I'll be more than willing to, walk you through anything that you have questions on regarding retirement, notes, non-performing, performing notes, even if you have some lazy assets that you're looking to put to work. Please feel free to reach out to me, talk with LarryHoffman.com. And with that, I don't see any questions. And you guys have a really great Friday, and have an